acted like this. Great. So the next type is our break and retest liquidity, infamous break and retest liquidity. This one is a little bit longer, right? So what does retail see for break and retest liquidity? Well, break and retest traders, right? If they're looking to buy, they wait for a high to be broken in an uptrend, and they look to buy on the retest of a previous high that was broken, expecting it's going to go higher. So what happens is this is their expectation right here. A is their expectation, but what's actually going to be happening in most scenarios is not that. We're not going to identify order blocks that align with break and retest. We're going to be identifying the order blocks that actually reside not here, but the order blocks that lie below break and retest. Because what ends up happening is when a previous high is broken, you're going to get initially an influx of buyers coming to the market thinking, oh, my break and retest is going to work. So price will retest it, might give you a little pullback. And then what's going to happen? Price will then end up failing from this retest, failing to make a new high. And then it will come to the order block below the retest as indicated in B. It'll give an initial small reaction, but then it'll end up failing. And that's the ideal scenario that we can expect, right? And then after B comes down to our order block, then we can expect a new high to be made. But as a takeaway, you do not want to look for an order block after a previous high has been broken. You don't want to look for an order block on the retest where a previous higher high was. So don't look there. You want to look below here. Now, counter for sells for the same thing. If we're looking over here, and we know breakout or break and retest traders, they look for, oh, here the low is broken. Here's going to be my order block right here. We know that that's not going to be the case, right? If you find an order block that aligns right here, that aligns with your low that was previously broken, it's not going to work. So then you look for price to come up to mitigate if there's an order block there, but just really tap the resistance or the previous support as now it's acting as a resistance. Expect a small pullback, price to then come to an order block above our previous, right? And then it'll end up breaking. So this is what we ideally want to expect. Just do not identify order blocks at these places. Retail traders use it because with retail logic, it makes sense to buy at the retest areas of structure. Again, you can understand how it makes sense from a retail perspective. Oop, it was tested once. I'm going to trade on the retest of it. And it's just in a bullish market, bearish market, making that new structure. Now, what market conditions does it occur in? It occurs in trending market conditions as it requires a high to be broken and retested to go higher, or a previous low to be broken, retested to then go lower. That's what they're anticipating. So I'll give you guys another 10, 15 seconds and we'll carry on. All right. Moving on. So now we're going to be going into the actual liquidity perspective of it, right? We're going to be going into the liquidity side of it. Hold on, y'all. If someone turns off their camera, just know that you will be kicked from today. Again, if you have to leave, let an admin know and leave and join back. So again, retail logic believes the structure is broken, price will continue, and they will enter on the retest. The purpose of this, right, specifically looking here, when this high is broken, traders are going to expect to buy on the retest of this high, right? And then obviously it'll fail. It'll come to an order block below, and then it'll go higher. The purpose of this is to trap traders into getting into positions early and drastically stop them out before continuing, if they happen to at all. In that last slide, we talked about with break and retest, right? Typically, this will happen, right? It'll fail on the retest to then go higher. But equally probable is price can just give a little reaction and then just completely fail, right? Because they're looking to buy on this retest. The other and last option is it can just completely fail and then go lower, right? Because it's trapping them in the wrong direction. So the purpose of it is, again, to drastically stop out traders before continuing, if at all. From a liquidity perspective, we identify the order blocks below the retest of a previous high. So below the retest of here, we identify an order block. And for sells, we identify order blocks above the retest of a previous lower low. So if you have a high, a low, a lower high, and then you have a new lower low, you don't want to sell on the retest of this right here. You see what happened. Price came to, mitigate this or tap that retest, gave a small reaction, but then came up to the order block right above, right, our retest, and then ended up going lower. So the expected outcome from it as a whole, remember, is that these three things will happen, and I would absolutely write these three things. Price can either retest the previous structure, give a small reaction, and then it can fail. Absolutely. This is the first thing. The second thing is price can respect the previous structure. It could actually do this. It could respect it short term, but then end up taking them out before going higher. So we don't look to buy and break and retest, but know that what can happen is it can work in a very, very small percentage of instances to go higher short term. But in order for price to go higher the long term, the retest will still end up getting taken out. I would definitely draw this. And then the third option, this is the second one. The third option here is price can just break a new high and it could just completely fail after the retest. Those are the only three things that will ever happen with a break and retest. Three options, three scenarios. And everyone, once you're done typing that or writing that out, go ahead and type one in the chat. So I know when to move on. All right, 8 people out of 40. Let's see. Everyone. Once we get 20, we're gonna continue. All right, on to the next. All right, now you guys are let's apply it together. First things first, I want to ask everybody, where are we trending? Up or down? Just draw the trend on the screen. The faster we can go through this together, the faster we're gonna get it, right? Boom. Always ask yourself, where are we trending? We're trending down. Don't mark the structure, just ask yourself where we're trending. Great. We know that we're trending down. So after we identify where we're trending down, now we want to ask ourselves, where is the break and retest for it to look like sells? So like we want to see here, we're in a bearish trend. Where is the break and retest here? Again, we're forecasting a move that will happen. So I would only draw the main one that's going to anticipate the new move. Remember, after a low is broken, it can either work short term, then to fail. It could either give a small reaction, come higher, or it can just completely run away. So in this instance, you guys have all identified it. Here, we know that we're in a downtrend. Great. If we're in a downtrend, we then want to identify, based on where price currently is, where's the break and retest? Well, we know here, if this is high, low, lower high, lower low, we know over here, this is a retest area, right? This is a retest area. So if we know that over here, there's not going to be over here, there's not going to be, when price comes back up to here, this isn't going to be a valid area to sell. Where then is the order block lying above that we do want to take a sell at? Boom, right? Awesome. Everyone identified it. Great. Always having that step-by-step process, making it simple, right? So now that you guys have all identified it, break and retest. Well, actually, someone drew it and I didn't want to say nothing. We do have this. However, you're always going to have two order blocks, if you guys remember, an extreme and a decisional, right? So in this instance, what do we see? Equal highs. Is this a valid order block? No. Is this a valid decisional? This is a valid decisional, but it's also lying at equal high liquidity. So this could work, right? This could work, but our extreme, because it's lying at liquidity, this becomes our new extreme. Again, this is a more advanced concept we're going to be going on throughout as we're learning. So this can work. It can work right here to go lower, but because we do have it lying at equal highs, most likely it could come up to the one just above, right? So if you didn't identify it, hopefully you understand now, but your order block selection is going to be specifically contingent on the types of liquidity that lie before it, but more importantly, the ones that lie after it. If your order block is lying at liquidity, even if there's liquidity before it, it will not work out. And write that down. If your order block is lying at after liquidity, which in this case it is, which makes it valid, but your order block is actually lying at liquidity afterwards, right? After it, it's not valid. So here then, we know what price is going to do. And as you guys saw, we did get a small reaction. Our order block, we got a small reaction, but it wasn't where the main move was. So because it was an order block, it'll give a pullback. But because we still had the order block was lying at liquidity, it didn't give us that full move. But after it took out that liquidity, right, all these relative equal highs over here, more importantly, combining another type of liquidity, think about it. Key zone, right? Key zone. It's difficult because you got to be mindful of all of these types of liquidity. That's why it's really not that valid. So type 1 if you understand it, and we're going to go to the next example. All right, guys, now it's your turn. Now it's your turn. I want you guys to all do this together. 1, everyone identify the break and retest. Where's the trend? We know the trend is evident at this moment. Where's the break and retest? Boom. We know the trend. We know the break and retest. Awesome. After we know what the break and retest is, which is right here, we know this is the break and retest. Where's our correct order block or blocks? Decisional and extreme. Boom, right? So let's see which one it's going to be. That's it, guys. There's your decisional. There's your extreme. Awesome. And there you go. There you have it, right? Oop, here's our break and retest. Don't identify any order blocks over here. Where's the one lying above? Here is our order block. And not getting into it now, but there's a reason this is valid, even though I knew one of you guys was going to identify it's lying at liquidity. The reason it's valid is because it's following order flow. Its order block was mitigated, price went lower, came to mitigate that previous order block, then it dropped. So this is our valid decisional in this instance, because we're already in a huge downtrend, right? So that's our valid order block. Right, so some key points to remember about break and retest. Some break and retest areas can work, as I've identified in A. Sometimes they can work, but only for the short term to grab enough liquidity to go higher or lower. So if you do see a break and retest work and you do have an order block here, and it does end up working, just know the reason that could happen is for price to then build more money below, because now it's a key zone, right? Isn't this a key zone now? But break and retest does work. It's building key zone liquidity, which in that case, we look to buy below, right? So then price will take out the key zone liquidity. In that instance, we then look for an order block below it, and then with the expectation of it going higher. Break and retest will fail after a slight reaction from the retest to accumulate more positions to then continue. So what happens is we could have a reaction. We could fail after the small reaction and then come to our area to then go higher. It's the second option. The third is our option C, which is after you have price take out and make a new low, and you see your break and retest here, well, price could also just go all the way higher. So 3 things to always be mindful and aware of, and you're proposed these different scenarios because you will know later on which one will happen. You're not going to know which one's going to happen now because that's a lot more. But all right, everyone should have these written down. Again, I'm going to give you guys 10 seconds, and then we're going to keep going right through it. All right, so the next type of liquidity, everybody, is going to be our trend line liquidity, our notorious trend lines. Trend lines are very subjective. There's no right way to draw a trend line. Some people use bodies, others use wicks, so on and so forth. A trend line, obviously, we know retail traders see a trending market where they look to get in on the retest of trend lines for continuations. If you are in a bullish market, where are you going to be looking to buy your trend line? You'd be looking to buy on a wick rejection of your trend line to then go higher, right? You'd be looking here to buy. If you're looking to sell for a trend line, right? If you're in a bearish trend, you're obviously going to be looking to take your position off of the next trend line mitigation or the next trend line retest. On the opposite end, if you're looking to use a trend line not for a trending market, but for a counter trend, retail traders do what? They wait for the break of the neckline of the trend line, wait for the break of it, and then what do? They look to buy on the retest to then go higher. That's what trend line traders do. They're either going to take their position on the trend line to continue to continue the market trend, or they're going to wait for the trend line to be broken, buy on the retest, then go higher. So that's what they're looking for, either continuing or they're getting in reversals. Retail traders use it because, again, like support, resistance, anything, the more touches that it has in a trending market, the more intent appearing so it has to continue doing that way. Again, they're either going to enter on the retest on the trend line or enter on the break of it. What market conditions does this occur in? It occurs in trending markets, higher highs and higher lows, lower highs and lower lows. Again, you're learning all of these, not because you're always going to be consciously aware of them. You should always be aware of them. But what you're going to be learning is where one thing tells you where everything loses. Right? Boom. So now, millions of traders identify trend lines as logical areas. It's the most utilized and manipulated retail tool. Everyone learns about it when they first start trading, right? How do you draw a perfect trend line? The perfect trend line, it doesn't exist, right? There's no right way to do it. So the purpose is to trap traders on the retest of the trend line and trap retail traders on the break of the trend line on the retest. So trend lines are heavily manipulated because when a trend line is broken like this, we know that those who are selling here have their stop loss above the trend line. They're losing. Those who see the trend line broken very drastically, they're looking to buy on the retest of the trend line to then go higher. So both of these types of traders are going to be losing. Even over here, what do you see? A trend line. The trend line is broken, but then price continues the opposite direction. So what is that from the liquidity perspective, right? So from the liquidity perspective, we know that identifying the order block lying after the trend line that caused it to be broken, this is the order block that we want to focus on. What we do to draw our trend lines, right? Because some people do not know this, but when you're connecting your trend line, you're not doing this. If you're in an uptrend, you're not connecting the higher highs. You are only connecting the higher lows in an uptrend for your trend line. If you're selling, right? If you're selling, you're not marking this. You're marking the lower highs that are making your lower lows. So what do? Right? We know that trend lines have to be broken, and there's specific reasons trend lines see this, or trend line traders see it doesn't work. What happens is when you see a trend line, we need to expect two different setups to happen for a trend line, two different setups. We need to expect one, that the trend line is going to be broken and then it's going to go higher. So we want to identify we want to identify the order block that resides below the trend line, right? So we need to identify the order block below a trend line to go higher. And if we're looking for sells, we want to identify the order block right after the trend line to then go lower. So these two setups are trend line one. These are the trend line one setups. So draw both of those, and there's another type of trend line setup we look for. In 10 more seconds, draw those two trend lines. I'm going to draw the other setup. We get right to it. 5, 4, 3, 2, 1. Great. The other trend line setup is this. Instead of just coming slightly past the trend line, what can happen is price will come to 1, 2. It'll take out two previous highs to then come to the first instance that actually started that trend line. So remember, for trend lines, price will either come to take out that first or that last area on the trend line to then go lower, or, very important, or it will come back to the first high that started the trend line. Come back in here to that first high. So it's either this is going to happen, or it's just going to come right here. So in this example, this would be your decisional, and this would be your extreme. So in both of these examples, you can see This first one, trend line was broken to come back to our first high. Second example, the trend line was broken to come back to where price first started the trend line, like in this instance, and just flip the drawing, inverse it, draw the sells, and you can come back and draw the buys. All right, type a 1 in your chat if you're ready to go, so we can keep flying through this. Again, you're not going to be able to write everything down. It's the point of the boot camp. You're going to have everything afterwards. All right, awesome. Love it. Boom, right? So the reason I keep pausing the screen is because, again, format was messed up slightly, just to make sure. Cool. All right.